Commodities posted the biggest annual gain in 4 decades, led by a doubling in copper, sugar and lead prices. Chinese demand compensated for the longest slump in the global economy since World War II. Let's get insights on where commodities are headed this new year from Gavin Wendt, founding director and senior resource analyst at Mine Life in Sydney. In July, he correctly predicted that copper would rise by the end of the year. The metal jumped to the highest level in more than 15 months last month. Now, Gavin, first off, Happy New Year. And commodities were a big winner in 2009, as you mentioned earlier. Is that where we should be pumping our money this year? I mean, what's the bet here?
Yes, I believe so. Certainly, if you have a look at the worldwide asset allocation, something I read this morning, I think only 1% of asset allocation is actually invested in commodities. So, there's huge upside as far as I'm concerned with respect to commodities. But if we look at specific commodities, I think that we should be investing in for 2010. In effect, it's a little bit of a continuation of the 2009 theme. I think there are some key commodities, namely copper, which you've already mentioned, gold, coal, and also iron ore. And pretty much most of those commodities are all consumed heavily by the emerging economies, in particular China and India. There's growing worldwide appetite for gold, given the the financial crisis that we've just been through. And I don't see that situation changing anytime soon. Certainly not during 2010, as I believe we're going to see continued scepticism with respect to the outlook and the health of the US dollar.
So pretty much a consumption story for commodities. Among the biggest winners last year as well was orange juice. What's the story there?
That's well, I guess it's with respect to a lot of commodities, it's a supply side problem. In the sense that there's less arable farming land available for crop growth, and at the same time we've seen strong demand. So it's the same story right across a lot of commodities. I think sugar was another agricultural commodity that performed very, very strongly last year. Again, changing dietary habits, particularly if we want to say in the third world, in some of the emerging economies, and that's driving demand for a lot of these, if you like, new commodities.
I want to focus on gold a while. It gained 25% in 2009, but down about 10% since hitting a record high of, 1,216 way back in December, I think December 3rd. How's gold looking? How much more upside are we expecting?
Well, myself personally, I can see a lot more upside in the gold price. The correction that we've seen, or mini correction that we've seen in the gold price, is not surprising. I think everybody was waiting for some sort of a floor to be seen with respect to the US dollar, and perhaps we've seen that floor at least temporarily. There's been a lot of short covering in the US currency, and of course with the US dollar recovering, we've seen a little bit of an easing off in the gold price, but I don't expect that to continue for too long. I expect gold's fundamentals to reassert themselves during 2010. I think all eyes will be on economic data during 2010, particularly with respect to the US and the US economy. If there's any faltering of the US economy's recovery, then I think we're going to see further weakness in the US dollar, and we're going to see gold reasserting itself. But my target, I think there's every chance that the gold price could hit 1,500 US dollars this year, based on continuing strong demand and also ongoing uncertainty relating to the US dollar.
And you say one way to play gold is to buy into Tanami Gold. It is an emerging gold producer. The company obviously on an acquisition trail. Is that the reason why you're liking this particular stock?
Yes, I've opted for some smaller companies with respect to our stock discussion, and it's easy to talk about the big guys here in Newcrest. It's nice to look for some of the bargains in the sector, and I believe Tanami is a bargain. It's had its ups and downs with respect to starting gold production. For the past 2 quarters, it's firmly established solid production, annualised at about 50,000 ounces per annum, and the company is looking at doubling that over the next 12 months, taking it up to 100,000 ounces per annum, and then looking at acquisitions and further exploration success. There's the potential for this company to be a 200,000-300,000 ounce per annum gold producer over the next couple of years. So I think it's just the right exposure if you're looking for something at the smaller end of the gold sector.
Okay, Gavin, we have to leave it there. Gavin Wendt, a founding director and senior resource analyst at Mine Life in Sydney.